Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and how this company has recently released around 3 ETFs. 2 of these are newer than the third one, however, I do want to put these ETFs on your radar because this will increase Sofi Technologies' overall revenues. We're also going to talk about how Sofi Technologies is betting that the current administration will be extending the student loan moratorium at least for 6 more months, which is exactly what I predicted in a previous video, that the student loan moratorium or the student loan payment freeze will last until the first half of 2023. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. Sofi Technologies is a fintech company or a financial technology company, and they offer their consumers an all-in-one inclusive digital app which gives them anything they could probably need in terms of financial services and or financial products. Currently, the SOFI share price is $7.92. However, investors think that the company is worth anywhere between $7 to $11 over the next 12 months. The reason we have a news update today for Sofi Technologies is because recently Sofi Technologies has announced that their Sofi Invest segment has launched 2 new ETFs and why they are also pushing a third ETF. If you don't know what an ETF is, that's fine. That stands for an exchange traded fund, and basically it's just a basket of stocks and companies. So you would just invest into this one ETF and it immediately diversifies you into a multitude of companies. So it's going to act as a single stock, but it really splits your money into various investments in different companies. The first ETF is called Sofi Web3, ticker symbol TWEB, and they are also releasing a Sofi Smart Energy ETF, ticker symbol ENRG. And the reason why they are releasing these ETFs is because both of these industries are rapidly growing right now. So Sofi Technologies not only wants to capitalize on this current momentum, but they also want to be able to extend an ETF to their investors so they can also get in on the action and hopefully achieve phenomenal future financial growth from this. The CEO of Sofi Technologies commented on both of these ETFs by saying, and I quote, "Our selection of Sofi branded ETFs enables us to offer accessible, affordable, and diversified investments designed with our members in mind, which has proved especially important for the influx of new investors we have welcomed recently." He goes on to say, "Sofi has a unique perspective on how the next generation spends, saves, and invests their money, given our breadth of products. With this next phase of ETF launches, we are focusing on funds that help people get their money right while also allowing them to invest in what they are most passionate about right now. We know many of our members look at Web3 and clean energy as important parts of the future, and we are thrilled to be providing low-cost investment vehicles designed to meet those interests," end quote. So now let's actually look into these 2 ETFs, but I also want to mention a third ETF that Sofi Technologies offers their investors and also other investors. And you can find these ETFs on the majority of brokerage platforms. You don't actually have to have the Sofi app to invest into these particular ETFs. The first one I want to highlight is their Gig Economy ETF, which has recently changed its name to the Sofi Be Your Own Boss ETF, ticker symbol BYOB. The BYOB ETF is actively managed, and some of its top holdings would include Airbnb, and they have a 2.25 allocation to that company. They have Shopify, where they have a 2.89% allocation to that company, and Roblox, where they have a 3.44% allocation to that particular company. If you all know me, my entire portfolio mimics a high-performing ETF because I am very diversified. I don't allocate more than a 5% initial allocation to any single company, and by doing this, it actually prevents me from paying an expense ratio. And an expense ratio for all of these ETFs that I'm going to talk about is 0.59%, and that's what you're going to be passively paying to invest into these ETFs. Now remember, this is not an active payment, so it's not like you're going to have to actively put in money just to own this ETF. They will automatically take this expense ratio out from any of your profits or earnings. If you want a larger breakdown of this Gig Economy ETF, or now it's called the Be Your Own Boss ETF, we have it on screen right here where you can see all of their portfolio weights. So this is a very good ETF in general. However, I personally think that the expense ratio is too high, and the reason why they have a high expense ratio is because this ETF is actively managed. The problem that I have with actively managed ETFs is not only that normally they have a higher expense ratio because that expense ratio goes to the quote-unquote management fee, but I also don't like it because there is no evidence right now that an actively managed ETF outperforms a traditional ETF. Actively managed ETFs just don't have enough data surrounding them to actually support any of their claims. However, for me personally, I would rather invest into a non-managed ETF that has a much lower expense ratio that's below 0.15%, but that's just me. Moving right along, let's look at SoFi's new Web3 ETF, ticker symbol TWEB. And this particular investment vehicle provides investors access to some of the most powerful and innovative companies that are trying to decentralize their approach to the internet. This would also include companies that are working on the metaverse as well as artificial intelligence. By investing into this ETF, you would be immediately diversified into around 40 different securities, which have 4 common themes, which would be non-fungible tokens, which are NFTs and tokenization, blockchain technology, metaverse, big data, and AI, which is artificial intelligence problem solving. So these are very innovative segments. However, my criticism still stands for actively managed ETFs, especially if they have a high expense ratio. Moving on to the Smart Energy ETF, ticker symbol ENRG. So SoFi has actually surveyed its members, and when they got the survey results back, around 73% of their members reported that they wanted a clean technology ETF. So SoFi listened and ended up issuing out this new ETF for their investors. This ETF has companies that are rapidly modernizing their energy solutions to more green energy and renewable energy sources and solutions. So they are trying to phase out fossil fuel energies, and they really want to be green and renewable. So if you want to be instantly diversified into very innovative energy stocks, then this ETF would be for you. However, again, I personally will not be investing into any of these 3 ETFs, even though they do have companies that I do like. For instance, in their energy ETF, I really do like Bloom Energy, which I hold in my personal portfolio, and I like how they are exploring various options with fuel cell energy as well as Proterra. But overall, I just can't justify myself buying an ETF with such a high expense ratio when there are other options out there where you can get similar growth but for much cheaper. You could also simply just go on Sofi Technologies' website and invest into these top 10 companies or their top 10 holdings, and that way you have a mini ETF inside of your overall portfolio and you don't have to pay any expense ratio. You simply just have to go to the ETF that you want, highlight the companies that you want, and then just invest into those companies. So now you not only get the growth benefit of this ETF, but you also don't have to pay the expense ratio. Moving right along, let's conclude the video by talking about SoFi predicting that the student loan moratorium and the student loan freeze will be extended by the Biden administration. Currently, Sofi Technologies had a fantastic Q2 earnings report where their CEO even provided an update by saying how resilient the company has been despite the overall macroeconomic environment of rising interest rates and insane inflation. However, it was the CFO, who is the Chief Financial Officer, who actually said what everyone was thinking. As usual, in the Q2 earnings report, they gave projections for Q3 and what the full year of 2022 is looking like. However, these outlooks and forecasts actually assume something about the federal student loan moratorium, and I'll just let the CFO tell him yourself by quoting him, because he says, "Our outlook also assumes the federal student loan payment moratorium will last until January 2023, which would result in a late Q4 2022 benefit based on the trend experienced in 2021. This sentiment is also echoed by the CEO or Chief Executive Officer of SoFi Technologies in a blog post where he wrote, "If the government needlessly extends the broad moratorium for a 4th time, not only will it add to the country's inflation woes and unnecessarily give to the wealthy who are willing and able to repay their debts, but it will severely disrupt people's ability to make long-term financial plans," end quote. As of right now, the latest extension by President Joe Biden was from April to the end of August, which is supposed to end on August 31st. However, with that being said, I still think it's going to be extended because Biden himself even promised a decision regarding the student loan moratorium by the end of August. We also know from a previous video that I did that CNBC reports that the president actually wants to spend around $321 billion to forgive up to $10,000 of student loan debt for each student. However, we have seen no updates from this particular policy and whether or not it will actually take effect. Right now, most Democrats are in favor of the student loan forgiveness policy, and they actually want to see Biden extend the student loan moratorium and the student loan payment freeze until at least the end of the year. On the other hand, Republicans are pushing back because they say it's unfair to the financial lenders and it's also unfair to the Americans who are actually paying on their student loan debts responsibly. So I would love to hear your thoughts on the student loan moratorium. Do you think it's going to be extended, or do you think it will actually end at the end of August? Also, do you think that the policy to forgive up to $10,000 for each student is going to be applicable, and do you think it will actually go through? I'd love to hear your thoughts down below. Remember to go and smash that like button, subscribe if you are new, and I will see you in the next YT video.